Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Quick Market Wrap Up for tomorrow, Wednesday, November 1st, 2023. So we'll just quickly look at what happened in the market today during the day and using the technical charts and then try to learn something from it and plan for a better trade for the next day. So there you go. So it was a down day. Less than 0.5% fall has happened in both indices. And the market in fact gapped up, Nifty also was green in the morning. In the morning gapped up. It went up and then fell into the resistance and then fall back, forming a wide range bearish candle, less than 0.5%, but because it moved up in the morning. So institutions continue to sell, but lesser quantity. Foreign institutions, domestic institutions try to balance and buy in, but yeah, the institutional selling from the foreign investors are continuing. And the resistance, the main thing is Nifty is holding good as long as 200 exponential moving average is held. The major resistance is at 19,300. That's exactly what we talked yesterday also. The 19,500. The Nifty support will be at 18,800. Before first date, it went to 18,900 till that and then came back. It gapped down and then reversed. Today it gapped up and then reversed. So that's the kind of thing that's happening. Overall, the charts are very weak. Momentum is weak. Momentum is hit to resistance and then fallen down from the RSI. It hit the RSI 40 and then came back. So that's even more bearish indicator as far as the RSI is concerned. And trend also is clearly crossed over the bearish in the short term. No doubt about that. Global cues are not that great yet. The rupee is weak and dollar is rising up. The yield is spiking up and US markets are down. Resistance in the bear zones in momentum perspective short term. So global cues great. Charts are absolutely weak and bearish in the short term. VIX is spiking, but it's still not closing about 12 at least. Right? It still remains in the historic low regimes of less than 12. This is not information. I'll just check. So the indicators, if you sectorial performance, if you see across the sector, it was a bearish day, except the FMCG and the reality, which so FMCG reality showed some green. Otherwise, it was across the sector selling. Operator data is showing that the PCI is no longer bullish. Yesterday it was above 1, both 50 in the Banknifty. Right. So let's just quickly look at the charts. So Nifty, this is what chart that you can see. Right. It had been consolidating for long. Broke that. Broke loose and 3 days of straight fall, still protecting the 200 DMA, and then we never know, let get bounced out. 2 days it was green. Some recovery had happened, but today it fell into the big selling. Exactly what happened. The candle is bearish, absolutely, but remember we had moved up and then failed at the resistance zone, and there is a zone which is very close to the place from where we dived into after the consolidation, right? The same zone. The Banknifty also, you can see the big fall, wide range bearish candle, but that also attempted to move and then fell into the resistance, hit exactly the 200 exponential moving average, which it had lost. It still has that. So that's so look at the RSI resistance. It's hit resistance in RSI 40 and then coming down. This is bearish. And as in Nifty also, it tried to move up, did not even get above the RSI 40, and then hit resistance and then reversed. So this is clear bearish. Trend indicator ADX is bearish in nature, closed over to the bear zones are rising. So the open interest data also, it's not that great. The PCR has fallen less than 1, not bullish enough on both the indices. And tomorrow is an expiry for the Banknifty weekly. So if you try to analyze the levels, that can be looked, so it's huge resistance area up there, right? From 220 and 50, confluence all this. So till 44,000, it's going to be, it can get solid off any time. It's huge resistance on there. Downside, the previous swing at 42 can act as a very good support, right? And slide towards that is possible anytime. Free zone. So if that producing low is also breached, it can find support near 43,400 nearby, so on. So tomorrow's expiry day, so indicator will be making it all to zero by the end of the day. So the range maximum that Banknifty moves maybe with the current week it may move 500 points. So 500 points from 43,000 would mean it can go to it can go to 43,500, right, max, right, and downside it can be 42,500 or 42,000. So that's exactly where we have the supports using is at 42,400 and 42,000. So these are the different places that we can see the resistance also. Maximum highest resistance at 44,500. Forget about that. That's not, doesn't make sense. But this one 43,500 is exactly the same place where we have the resistance on the charts as well. So 44,000 and 42,000. The 2,000 points is where the game is going to be tomorrow. But market is going to move next expiry day weekly. Hardly 500 points at this fix. So you'll have to find, stay away if you're selling. At the same time, we should have some premium left also. So that balancing has to be at the strike sets between the 42,000 and 44,000 is all that can be told as of now. But it's huge resistance upside. Momentum also is bearish. Trend is also bearish. Short term, all short term, right? So, but if there is a down move happening, it's an opportunity for the investors to buy quality stocks in SIP mode, small quantities for every dip. But trader, you have to be cautious because market is clearly saying it's bearish. It's already corrected and then given a dead cat bounce kind of thing last 2 days, but today it fell into the bears attacked, and so you have to be cautious. Downfalls can be big if it breaks down. Till now it had 3 days. Can wipe out all the gains of 3 months. That's what market does when it is falling down. So you have to be cautious. Hedge your positions and then play it safe. Look at the probabilities based on the charts and the open interest, and then place the bets with tight stop loss and hedge portions overnight if you're carrying forward. So to play. Hope this helps to bring in some clarity on the market analysis on two indices and overall. Right. So US markets, we'll have to see tomorrow if that's going to show some green. It had found some support zone after a big fall, continuous fall of several weeks from the top of the descending wedge. We'll have to see whether tomorrow it shows some green. Just like our market did, US markets also attempted to move up slightly. There is some green that's seen in the Nasdaq and the S&P 500, but Dow Jones is red as of now. That's how US markets are. It has been falling since long. It's in the bear zone, so any green here could give some hope. Global gives an out rate is the reason why the market is correcting. FII money is what is falling out. So play it safe and happy trading, happy learning, happy investing. Subscribe if you're not subscribed, share to others. Reach out to me. Thank you. Bye.